Hey, Nick, what about project bank accounts? Does that have a place to improve certainty? Who wants to tackle that question?
Well, I guess there's some talk about that because I think in Queensland, and Mark can correct me if I'm wrong, I think the QBCC would be the statutory authority probably looking at implementing that. I think there's some new legislation which is all about ring fencing money on a project by project basis, which sounds good in theory. My concern is when a head contractor, particularly and big subcontractors, are working on such tight margins, there's not an ability to have a central treasury function to move, which they currently use the money for. Funds in from project C might temporarily plug a hole in project A, and so I'll be unable to do that. So what that will mean is that implementation, I think, will require head contractors in particular to have a lot bigger balance sheet to be able to plug the holes, the cash flow holes in their projects.
Right.
The only other thing I'd add to that is I couldn't agree with you more, Mark, about the balance sheets needing to be boosted. But the only other answer I can see to that is by having the project financiers and the developers also tipping into the bucket earlier on in the piece, and it being a more like project alliance type model as opposed to master servant, which it currently is the flavour of the month, or has been for the decade.
Hey, thanks for watching this clip. Hermes Capital has been providing asset-based lending solutions to all kinds of businesses right around Australia for over 12 years. So reach out if you know someone who needs a specialist non-bank lender who's quick on their feet. Cheers, and thank you very much for watching again. See you next time.